We often get asked about the benefits of having a holding company. Should I have a holding company? And if so, why do I have one? Or do I need one? Or should I get rid of one? Well, these are all great questions. So let's start with a discussion of what is a holdco in the first place. A holdco doesn't actually do anything. It doesn't produce any goods or provide any services. It primarily exists either to hold shares of another operating company or to hold investments, such as a portfolio of marketable securities. The first common use of a holdco is where a holdco is interposed between the owner of the company and the active operating business. This allows profits to be flowed up tax-free via dividends and retained in the holding company until the business owner needs the money personally. The second use of a holdco is to simply hold investments. Those investments could be marketable securities, or could be a portfolio of rental properties. And again, that income is then kept inside the holding company till needed, and ultimately paid up to the individual ultimately as a dividend. There are a number of benefits of using a holdco, as discussed in our latest report called Hold the Holdco. The first one is asset protection. The legal structure by which you hold your assets is obviously critically important. And using a holdco for various assets like investments means that typically they may not be accessible by the creditors of the operating company. Another reason for using a holding company is the timing of compensation, namely dividends, because a holdco can effectively allow you to retain income inside the holding company, which is paid up by the operating company, and then defer paying it out to yourself until a later point in time. Number three, it may be a benefit to have U.S. securities held inside of a holding company simply for U.S. estate tax planning purposes. If you own U.S. shares when you die, those are considered to be U.S. situs property, and that could be subject to U.S. estate tax depending on the value of your estate. By using a Canadian holding company to own U.S. situs property, you may be able to avoid having to pay U.S. estate tax on death on the U.S. situs property held inside the holdco. There are a variety of other reasons discussed in our report as to why someone might use a holding company, such as for a mergers and acquisitions activity, or a future sale of the business, or even in the context of an estate freeze. The second area that we often get asked about when it comes to holding companies is, should I incorporate my investment portfolio? To answer that question, we really need to come back to the concept of integration. In other words, would I actually pay more or less tax on my investment income if that income was earned in a corporation or earned personally? As Figure 1 in our latest bulletin, Hold the Holdco, shows, in every province in Canada, there is a tax cost of earning investment income inside of a Canadian holding company versus earning that same income personally. There's no immediate corporate tax on Canadian dividends, provided they're paid out the same year. But in essence, what this chart shows is that in most cases, it doesn't really make sense to have a holding company. That being said, will there be a tax deferral? In other words, is there some flexibility in timing? As we said earlier, using a holdco when we have investment income can allow us to defer paying tax on that income. Again, if we take a look at Figure 2 from our report, you can see that pretty much every province, there's actually a prepayment of tax as opposed to a deferral. And even in the few provinces where there is a slight deferral, those amounts are relatively small. So in a nutshell, I would say be careful when it comes to incorporating an investment portfolio. There's a limited application. And in most cases, unless you've got money already in there from the sale of an operating company or maybe moved up there from the operating company, holding an investment portfolio inside of a holdco generally does not make good financial sense.